Alright, what's up guys? It is the 12th of May 2025. We're going a couple trades we had today. The first one was on the 9 o'clock hour. As you can see, this is the hourly chart right here. So I have this hourly fair value gap marked out on both. This is S&P on the left, Nasdaq on the right, NQ. So we have this marked out. Drop on down to the 15er. Once we get down to this 15, I want to mark out highs, lows, all that good stuff. Highs, lows, fair value gaps on the 15. So right there, so you can see what we have here. And now we just drop down to the 1 minute. Once we see price hit an hourly, we want to drop down and see what we are hitting on the 15 minute. And if we are aligning with something on the 15 minute, then we can take a trade. So what we have here, I'm going to show you one. I took a loss this morning. And this, I'm going to show you kind of why this was a very a small trade, because I don't really like these. So you can see right here, you have a small bearish fair value gap right here on NQ inside of this. So you see this candle right here closed above it. So that would normally be an inverse fair value gap. And you can see this line right here, this is the top of your hourly fair value gap. But we're going back to the 15er now. So that 15er, that top of that hourly fair value gap, is also a swing low for the 15. So that means you can take a trade off of there if you see a setup on the 1 minute. So why I didn't like this one, I still took a small position and obviously got stopped out right there. I like to see it once it has a big dynamic, a forceful run like this. I like to see it have more than just one bounce. See how it comes down here and it hits that and then it tries to bounce up. I like to see it do this, where you have a bounce, come down again at least once, and then like right here is great because you see it, you come down, comes down through again, here, comes down and tests it again. This one does not make a new low. S&P does, so that's a small divergence right there. That's what I like to see. So after I took this first loss, I went ahead and I got in on this move right here and made it, since it was a small position on this one, it was a very small loss. I went in almost normal size on this one right here, so I made that back, plus some on this little trade right here. And it didn't hit what I would normally be looking for. I'd normally be looking for, a previous 15-minute candle high, 15-minute fair value gap inside of the hourly imbalance. But one thing that I always do, as soon as I see a 1 minute high get taken on one and not the other, so a divergence. So what you can see right here, see how that little wick right there doesn't get taken, and this one right here does. See, that's the same candle on each chart. And then it slams back below right there. As soon as I see that, I'd normally just close the trade. I at least close the majority of it. But in this case, I'd already made back what I had lost over here, and I just said to hell with it and closed it. So if we go, we just continue. So we just keep on using this same arrays that we have here. Once it hits it once, I'm not going to take another trade off of it. After it's traded through it a couple times, it doesn't have the same bounce to it. If you know what I mean, it just it's not the same. So what you did get though is in the 9 o'clock hour down here, this was actually a pretty good trade. So we come down. You have your little bearish fair value gap right there. Bearish fair value gap right here. Close above it. Okay, so you can get in right here with your stop right down in here. I don't like putting it right below that, 'cause, yeah, you probably would have gotten wicked out there. I'm not sure. I keep my stop down lower, just down around here. So what I don't want to see is I don't want to see a candle close below this low. It could kind of wick down there like these did. So that's why I normally keep my stop down here. So obviously you take it here, it starts trading up. Now what I normally do, and you can see here, now so you enter here, we'll just put your stop, yeah, somewhere down in there, right? So at a 2x, I'm taking the majority of the trade off. 2.5x, I'm taking another portion off. 3x, which we get up to over here, by the time I hit 3x, I'm pretty much all out. I might keep a little bit on, but not much. And if you can see over here, so see right here, this is 944 candle. That means this starts a new 15-minute candle right here. So hitting back over to your 15-minute, you can see this right here. So this is your 930 candle, so that one goes from 930 to 944. This is your 945. You see how it goes up above that candle right there? And then what do you also have over here? You have this little wick that poked up into this fair value gap. So you have this negative fair value gap right there, that wick. You see that wick that poked up in there? So that's going to be another, and you see how that one hits it right up in there. And then you have this previous 15-minute high right here. So now let's drop down to your 1 minute, and you can see those. See, boom, right there. And right over here, that 944, as soon as it gets up over that, I'm looking for reasons to start getting out. And as soon as we hit that, yeah, you can get the hell out. Alright, so that's it for the morning session. Alright, so now we're going to look at one trade we had over the afternoon session. So this is hourly chart. It's going to be on the 2 o'clock Central Time hour. So this one right here. You can see again, I marked out this hourly fair value gap here. So we drop down to your 15er. We'll just find, you know, what we have in here. So as you can see, inside of this hourly, we have multiple positive fair value gaps over here. So we can mark them, I mean, if you want to, just for shits and gigs, you can mark them all out, but, you know, we can see clearly this is all, you know, hindsight, so you can see what it does here. Alright, so this is, you know, your 15er, so you have your two 15-minute fair value gaps here. Again, let's drop back down to your 1. So we come all the way over here, right? Okay. So as you can see over here, kind of got to enlarge it a little bit so you can actually see it. But there is a fair value gap here. These are all negatives. Very, very small ones. I'm not a huge fan of these. And then you have a couple over here. Now this is something that I would always say. This is why I don't ever trade the S&P, but I use it for divergences, like you see here. where this one took the low and this one did not. And then I also use it for entries, because you see where this one right here, it went through this fair value gap, right? And in this case it would have been fine, because your stop would have had to go right here, below, you know, this candle. It wouldn't have hit it. But you can see this one right over here didn't get above it, so I wouldn't have entered there. And you get a better entry doing it this way anyway. So right now you have this comes down, takes liquidity down here. This one right here takes liquidity, and then we move up. So your entry, you would want to enter right there. And we just do the little dealio here. There's your stop. And first target would be, so that right there would honestly be, your final target is going to be up here. But like I've said before, I'm not waiting for all of that, because I don't need large risk to rewards. So I'm taking a good chunk off at 2x. I'm taking another little chunk at 2.5, and then I'll take, you know, a remainder at final target right up there. And you can see it goes a little bit further, but actually it hits, yeah, it actually hits target right at right before close. And I normally try to get out before that 3 o'clock Central Standard Time candle hits, because a lot of times it does some weird shit right whenever it closes. Anyway, that's the trades for today. Y'all can drop some comments below if you have any questions.